Okay. We live?
Yep.
Okay, good morning, everyone. Thank you. I apologize again. Called meeting of the Finance Committee to order. Hope everyone's had a chance to review the minutes of the July 16th meeting. Ask for an approval. There are no questions.
So moved.
Second.
All in favor?
Aye.
Thank you. Move to the treasurer's report.
Yes, good morning. I thought we would start with the September numbers and the balance
What
sheet.
page is that?
Let's see, that's the balance sheet would be
Fourth page in on number.
yeah, the fourth page.
You know?
Basically, if we go down to the first category, the total loan CEDC cash accounts, you'll see we're down $62,000, which means Martha and Steve have been keeping up with the pace of the repayments of the existing loans. And when you're on the 5 to 7 year terms of loans, it's very, very hard to keep the money on the street as fast as it's coming back in. So, but we are ahead of the game there. Our operating bank account, is down by $21,000. That again is part of the issue where we're on a net aggregate basis because we leave the interest that we earn in the account, the loan account, rather than take a fee. That you'll see the operating account go down. We also are waiting for the fourth quarter payment from the county at $115,000, and so we should look at it. I'll put a cash flow report together for the future, but so that you'll know, is that account down because of timing or is it down because of spending? Our reserve is up because of interest rates, and so those two accounts together are basically the $500,000 we like to keep in the CEDC account so that we have a full year of county money available. The county, for some reason, had to cut back. The reserve on our SBA accounts is up by $34,000, and that's because we drew down more money and we had to put 15% of the new money into those accounts as part of the SBA regulations. The SBA loan accounts, they're down $75,000. Again, we took in new money, and they're down because of the repayments, and you can see that again we're still putting money out at a pace that exceeds anything we've ever done before. But as the portfolio gets bigger, that's required to be able to keep the pace of the repayments. Our current assets really haven't changed. Our accounts receivable include the technical assistance grant from the SBA, the quarterly payment from the Hudson IDA, the money that the county has that we spent that we're on broadband. We do have deferred income, deferred revenue in the Columbia Forward account, and then the county IDA. And then we have two accounts receivable that relate to monies that we advanced on behalf of the IDA for permitting for the Land Conservancy project and work done by our consultant related to Labella. And we have $3,500 due from the county. So, what we have done is we have met with RBT, and they have these, and, he had told me he would have the information for this meeting. But we've found some ways to really tighten this up and present it in a way, that will be more, definable, because you also know that the accounts receivable include those 4 Office of Community Renewal grants that also have a corresponding entry on the other side. And when we get, further down in the report, you'll see where the way they're bunched into accounts receivable and their deferred income, it distorts the deferred income. It looks like we have $700,000 of deferred income. So they are cleaning those up, and unfortunately, I met with them 10 days ago, and he thought he would have it in time, but no choice.
Just a sense or two, Mike, on how those work again. So it's a grant, and then if the obligations are fulfilled, the grant is.
It comes as a loan.
Yeah.
And if
Forgiven, right?
and it's forgiven.
Yeah.
And what we were doing initially, we were booking it, as, we were only booking one side of the equation, and when we wrote the grant, when the grant the loan got written off, we had forgiveness of indebtedness income and got a hit on income.
Yeah, okay.
So, on the county loan fund, you'll see we have $128,000, more on the street than we had, previously. And on the loans receivable for the SBA, we have $425,000 out, more than we had before. The fixed assets, do remain the same, and including the other assets, which includes the allowance for bad debt. We did take a $15,000 or $12,000 write-off.
11 something.
11. And we have projecting a profit for 2024, and we'll want to look at close to year end allocating some additional money to the debt service reserve, because when you have it, it's better to do that than not. So, we are up $430,000 in total assets, but primarily, again, that's the loan fund. So, on the liability side, we are working with RBT to modify how we handle the Columbia Forward loan. I'm sorry, Columbia Forward grant, as it relates to the chamber. We're going to reclassify that and put all the full grant amount in as income and expense the $65,000 we pay to the chamber every year. We're doing it through some to from, and that really should only be done with intercompany relationships. Our accrued expenses are basically relate to payroll issues. And if you get into this deferred revenue, this is where you can see what I was talking about with respect to the Hudson Valley Creamery, Clock Estates, Return Brewery, and Plainville grants and loans. We are carrying a $5,200 deferred revenue from the Berkshire Conic Community Foundation related to a solar project we did several years ago. I do want to get some direction from them as to how we can spend that and get that out of into revenue. We have not moved any of the deferred membership revenue over. The accountants have previously made us book membership on a 1/12 basis, and so that will hit income this year as we move forward. You've got the Creamery grant, got Clock Estates in return. We've deferred the Columbia Forward grant revenue, and that's the revenue that relates to if you get a loan, they'd give us $150,000, so that if you got a loan, you got 10% cash as a kicker. So that money is just about depleted. Each time Martha and Steve make a qualifying loan, we hit the deferred income and put it into income and then take the expense. Flipping over to the next page, we do have deferred money from the housing grant, and we also have deferred money on the micro enterprise grant. The housing grant we've extended, so we'll have full support for that program through 2025. We're working, we've set up through the housing task force, we've set up a land bank. The land bank gets administrative funding, and we believe that there'll be an opportunity to continue the housing initiative, not only through ongoing county support after 2025, but through additional administrative funds that the land bank will generate for CEDC under an administrative service contract. On the long-term liability, we do have 66,000 left on the EIDL loan, which was 100,000. We're paying it off over 5 years. It's at 2.75%. We thought of keeping it and loaning it out at 3.75, but we didn't think the SBA would want to hear we were doing that with their money. You can see our liability to the SBA is up by $333,000. Again, because of the success that we've had in drawing down additional tranches of funding to loan to people. And that's so important because the volume that we do is one of the factors they use in calculating the amount of grant money they give us. I know Brian and I and Tara previously and I had discussed reorganizing the balance sheet a little bit, get it more in sync. And I think my meeting with Mike Torcha at RBT this month, we've got a plan to do that. And and as you know, it's more about how it prints out the report as opposed to how it's not going to be a lot of restructuring of the backside of the balance sheet. It'll be just how we organize the report. Moving to the P&L, which is on the back of the second sheet of paper. Jumping out, the net income is $73,000. We had projected negative 37, so we're $100,000 ahead of budget. But again, that you'll see is all in the payroll categories. On our administrative revenue, we're down $21,000. We believe that there's a good chance that Providence Hall and Skylar Court, which are two housing projects that are being financed through the city IDA, will close this year, and we'll pick up about a $25,000 fee there. We're going to pick up a $2,500 fee from the IDA from the Wick Hotel, which is closing today. They're going to get a $25,000 fee, and we're entitled to 10% of that. On Columbia County income, we have 3/4 of the $460 that the county pays us for the administrative contract. We've got the Columbia Forward income that we've earned to date. We did not take the broadband grant because we were trying to save the county some money by getting a state grant, which we just got. So we have to reconcile once that grant is issued, how we reallocate those expenses. And we have, they're fully accrued on the Columbia housing income. There is some receivable there, but it's the grant income, the 21.8, that's the grant where we keep moving when we make the loans and they get the grant, we move the money from deferred income to this category. And then we expense it down below. This grant land trust and is $10,000. We're also going to reclassify that so that when we do take in funding through a fiscal agency relationship, such as this was $10,000 grant that At the last minute, the city of Hudson said they needed a not-for-profit to be the applicant for the grant for the housing trust fund that they were setting up. And so we did that, and so the money comes to us, and then we send it to them as they submit bills. We try to do those only when can get them done within the same calendar month, or same calendar year, so that, we're not carrying these on our balance sheet or our income statement for any period of time. We have two others. One was a $5,000 grant from Galvin for the Bangladesh Festival. And the other was I believe it's $10,000 or $15,000 grant to the town of Stockport. Stockport can't accept grants. So again, we've done this for Stockport, we've done it for Germantown, we've done it for New Lebanon over the years, where we accept that grant on their behalf, enter into a simple fiscal agency agreement, and try to get it in and out within the year. Bank interest is, remember we were like, we've really done well there. I think, when we look at the budget, we're going to cut back a little bit because I think rates will drop, from the 4% to the 3.25. But again, that's, and because we get more money out on the street, at one point we had 50% of our loan fund revenue in bank accounts, not on the street. We'll be getting a higher level of interest on the interest earned line from loans, but we'll get less from the banks. But the interest earned is at 7+ rather than what the bank rate is. Membership, we're down $5,200, but we have the $11,000 to bring over. But we do, when we get into the budget, we do have to talk about the membership program going forward. You can see here where the grant, somehow we ended up with two categories of grant income. The one up above where we do have the land trust, and then the Bangladesh and the Marston Park. I guess it was a $5,000 grant this time. So we're going to get those so they're all in the same place, and the expenses will be all in the same category, and they can be tracked much clearer. The $5,500 in other income is primarily fees, closing costs, late fees, and things of that nature related to the loan program. And obviously the total SBA D/A technical assistance grant is the accrual on the grant that we received. And, we did get an increase over what we had received in the previous calendar year, because this grant runs from July 1 to June 30th. And last year it included 6 months at $150,000. So we are $50,000 ahead of the budget on total income. On the expenses, we're 20% off on below budget on conferences and travel, but I think Chris had gone to a couple of conferences and there are a couple coming up. And so, I suspect we'll be on target there. Consulting fees, we're down by $8,000. Direct program expense, we're up $3,500. That's the annual meeting. Next year, we're going to budget additional funds for that. Employer expense, again, because we haven't filled Jessica's position, we're down by total employee expense of $74,000. If you add another quarter to that, that's exactly what the cost of that position would have been if it had been filled for the year. Facility is up because we paid $5,000 beyond what we had budgeted to extend the lease for another time period. The CRC grant is the grant that we make to the Capital Resource Corporation to keep it in business. We did pay out the Bangladesh funds here. On insurance, we're modestly under budget. Micro business expense, we're modestly under budget, but, you know, Martha does work to, because of the fact those funds are coming out of the SBA grant, we try to make sure that we're using them for program expense, not entirely for operation and administrative expense. On our new initiatives, we're over by $3,700. You'll see that that includes the broadband. We spent $17,000 that we haven't been reimbursed for, and we had only projected $9,000. This grant will help us balance that out. We did the $15,000 to the college for workforce. The climate forum, we do have revenue that we will that will net some of that out, but we did make $2,500 expense contribution to the climate forum. And these funds also include the climate carnival. So, and that was at the request of the Board of Supervisors. And you can see this land trust, the 6751, we have $10,000 in revenue and 6751. So, you know, basically, you know, there's $3,500 that we still owe to the land bank. And I want to make sure that when we're setting these things up, that we're aware of that obligation, so that we don't get misled. If the grant comes in at 10,000 and we don't spend the money for 6 months, we're inflating our P&L by 10 grand until this money is expended. So I did talk to the accountants about that. We did spend $3,500 applying, putting together the application for a USDA grant. We have not heard. It's supposedly something soon, but on office expenses, you know, we're $2,000 under budget. You know, the categories balance each other out. We're on target with the interest expense on the EIDL loan, modestly under budget due to lower legal fees for professional fees. We are a little bit over budget on travel, but the IRS mileage rate went up and people are out on the road, and that's a good thing. And our interest expense on the SBA loans is down because during the COVID period, and I believe when those tranches were issued, Martha, they charged very little interest, but now they're back to charging 2%. So again, you know, the total net income is better than budget, but it's all primarily, when you net out everything, it's primarily the salaries. There's two sheets in front of you. One has some colored highlights, but if you take the one that's does not have the colored highlights, and you turn to the second page of the one without the colored highlights. Basically, what Cat ran here was based on actuals through September and budget through the end of the year. Where will we be? On the income line, you know, I'm thinking that, let me just double check this. Yeah, I think we have to double check this because it seems, I don't think it carries the 3 months for, may have the budget for the year, but because it's showing 911 of gross income, and on the September report, we're showing 902. So well, Kat and I will redo this. I was trying to get a 9-month actual and 3-month projected. But my guess is I don't see any, I see us bringing in some additional funding because we did get this, did get the grant for $120,000 for broadband. Unfortunately, it's a grant where you have to spend the money and you get paid at the end of each, you'll get paid in June of next year for what you spent. But again, it's not as if there's any risk that you're not going to get paid on a reimbursable basis. So moving to the budget.
Before we get to the budget, we need to approve the September financial reports.
Please.
Any questions for Mike on the September financial reports? Second? All in favor? Aye. Thanks, Mike.
Moving to the budget, it's a work in progress, and it's it's really particularly on the second and third years that we're looking at. I based it off the 2024 budget, not the actual, because of the fact that we're going to be hopefully filling that position, or at least the project manager's position that would, as you recall, we advertised for two positions when Jessica left. One, her position at the higher compensation rate, and then one at a project manager's level, so that if somebody showed up without the level of experience that qualified for Jessica's position, we could hire that person and not be in a discussion under the new law that we had advertised a higher salary range. What I tried to highlight is where I see either anticipated increases in revenue over 2025, 26, and 27, or decreases. And those are then going to have to be tested in terms of the assumptions that I made in doing that. As an example, if you could look at the IDA projects, we get a base fee from both the Hudson IDA and the Columbia County IDA of $12,500. We changed the contract with the county so that instead of getting $24,000 a year, we get $12,500 a year, and we get 10% of any fees they collect. So when you have two lines for each of the IDAs, the baseline is the first line, and the line that says project for both of them is the where we're hoping to get the 10%. We do anticipate having increases in those categories going forward. I think it's certainly, and so there'd have to be a $15 million project in 2025, a $20 million project, or two projects totaling $20 million in 2026, and then a $25 million in aggregate project in 2027. I think we'll have a better feel for this at the county level. There's 2 or 3 projects in the hopper, but we've also seen anticipated projects like Labella this year we thought would close, and it didn't. Again, the goal here was to see what we would have to do to get to a balanced budget, not what I believe we can do to get to the balanced budget. Certainly for 2025, I think those numbers are firm. But as we get further out, the Office of Community Renewal Grant Administration, we have upped significantly even for 2025 and then stayed flat. That's because of this program of 2 things. One, there's a grant program where we can get someone $15,000 a job in equipment money through the Office of Community Renewal. We did a $300,000 grant for Return Brewery, and we did a $350,000 for Clock Estates. We're allowed to take $18,000 in fees on each of those. Martha and Steve have been working on this new micro enterprise grant program, which again is 300,000, and what's our maximum fee, 30,000?
Yes.
We can take a $30,000 fee. So, you know, I believe that, and you'll remember, we didn't take the $30,000 fee for that program this year because we oversubscribed the program and we didn't want to tell two people that they couldn't get money because there was no way of differentiating them from the other people in the program. But starting next year, we're going to manage that so that we don't oversubscribe and that we can take the full $30,000 from that program. They've now streamlined it that if you participate in the program and you get the $300,000 out on the street, you can reapply under the same approvals that were previously initiated. You don't have to reapply from scratch. So, you know, and then to the extent we can do one loan to a business that gets up to $300,000 in equipment, that's how I got to the 40,000. So I'm fairly confident that we can do that on an annual basis and even perhaps do better.
Can you clarify that for a minute? So there's fees due to the CEDC that were not recorded as income?
We took it as income and expensed it as grant money. So
because it was repurposed back out.
Yeah.
For additional.
Yeah.
Businesses.
And it should probably be recorded as a fee and discounted and expensed out as a. The issue was what we had 13 people.
13 businesses, yes.
And if you added it all up, it was 203. We took a small fee.
We took just over 5,000.
We took 5,000.
Yeah.
Okay.
But so the criteria was that you had to meet certain 2 years, less than 2 years in business, this, that, and the other thing, which everyone had to qualify to get in the program. And you had to take a 4-week course. Everybody came and showed up for the course. And we didn't want 2 people out there saying they misled us because we felt that the reputational risk was greater than taking the fee and having them say, well, you didn't cost us $30,000 to do it. So we took the $5,000 and we're going to do it so we get the money next time. And, you know, I think that the 2 people that we would have excluded probably would have not been happy with that. If we did look at who, if we had to, who would we have excluded? And it's really hard to come up with any independent criteria that would have resulted in.
But for the future.
We're not gonna take people in the program beyond what it was the first time we did the program. So we'll only take 9.
Got too many RSVPs. Yeah.
And we didn't cut it off. We didn't say, okay, you know, because we didn't realize some people would take, we didn't think everyone would take the full amount. But it's 25,000.
Yes.
So we thought, well, okay, we kind of made our pyramid that, and it was inverted, that 10 people would take 25,000 and the others would take 5, 7, and 9. So we just have to be more, and it was, so that, you know, I think that we also had the luxury this year of having, you know, so we would be $125,000 over budget with net income, but I do think it was the right thing to do under the circumstances, and we cleared it with the state so that we weren't, and also we cleared it that this wouldn't preclude us from taking the full amount next time. Where we have some concern is, you know, the money from the state or from the county in 2025 is already contractually obligated. In 2026, we do have $42,000 in deferred income that from Columbia Forward that we've been holding. That was because they had paid us for the full year, the first year, but we only started the program in July. So we would have that money. We will have the $60,000 in broadband in 2025 and 2026. On the housing side, we do have $25,000 in reserve. in deferred income. But, so that would mean we would need to get the balance, which would be, $65,000 as an administrative fee from the land bank. It also means that, with the county money dropping off from Columbia Forward and from the housing income, that we have to get the county to increase the 460, which has not been increased since in 12 years. I think the county, it may not come on that line. It may be that there's another initiative that they want us to focus in on, like they did with broadband, or they did with housing, or they did with the partnership with the chamber. I mean, it's not inconceivable that they might fund that program again with county money, not ARPA money. But I was trying to see where with those two ARPA money projects dropping off, what would we need to do with the county to be able to stay on an even keel? On the loan interest, Steve and Martha have done projections that show, based on some assumptions on continuing to get, if we get the $1 million draw from the SBA that we have applied for, or in the process of applying for, that, and we continue to get 70% of the CEDC money on the street, and we don't have any, and with a 15%, his analysis used a 15% loss rate, which we don't have. We will go from $100,000 in loan income interest this year to 120 to 140 to 150. The risk going out further than that is if the SBA program changes, or if it tightens up, or if it's eliminated. There were some members of Congress, when they were doing the debt extension, that wanted to at least freeze the program or eliminate the program. Membership, I do think can't compete with the chamber at a level where we're making people choose between the chamber or us. But again, when I got to the bottom of the expenses and saw the deficit, I came back and said we need to do more with membership. I think we have to have, I know Jim, we had talked about maybe having a subcommittee or a task force of board members to explore what type of membership program really might work and how it would be priced to get businesses to be interested. Again, going down to the SBA, to the extent that we continue to build the size of our SBA loan portfolio, I have included modest increases in the technical assistance grant program. Again, that's not sure that we can do that, but it's, again, trying to get a sense of where we might have opportunities to find new money. I'm confident we will have that for 2025, but that will be the test when they give us our grant for 2025, 26. It will tell us if it goes down, we better readjust the projections going out. But if it stays constant or goes up, we may have some ability to rely on increases going forward. Moving down, in 2026, I eliminate my half-year consulting fee, assuming I am here through June of 2026. But you'll see down below, we increase the salary level at that point as well. When you get into the salaries, I do have a separate salary spreadsheet that we can review at the next meeting in executive session. But based on where we are in 2024, and where we anticipate being in 2025. So you can see the real jump is in half a year in 2026 and the full year in 2027, but the 2027, we completely eliminate my consulting fee in the expense category above. Basically, everything else except the two highlighted areas on the next page are either a 3 or 5% increase based on when you look at the increase in technical assistance. I just think that if we're getting more money from the SBA in those subsequent years, we should be spending more money on technical assistance. And we've always tried to at least spend 25 to 30% of the money we get from that grant on the technical assistance side, because I think that's what we show in the budget to the government. On the new initiative side, obviously, the housing will go down because we'll be shifting to the land bank model. The broadband study, I'm planning to spend, $45 of the $60,000 in income on outside expenses. That could be lower. Columbia Forward trails off, and I've left the workforce and education piece constant. When you get down to the bottom, you can see we had budgeted a $5,000 net income for 2024, but we're going to have 125 because of the not filling the position, and you get pretty close to break even. So you can see there's some real refinement that has to be done here. I'm very confident to be able to meet the $1.25 million income and expense range for 2025. I want to refine some of the categories as it relates to shift things around a bit. I do think it shows that in 2026 and 7, our biggest jump is going from 600 to 850 in payroll.
Yeah.
And that's going to be a function of, I think, what the board and the search committee is looking at in terms of staffing and compensation. I'm confident that with the staffing that's shown in that chart, that it's at a level where each of those positions are now at a compensation rate with benefits that would attract someone to fill the position.
So that reflects 2 people being added.
Yes. Right. Well, it reflects, yes,
Or
2 people.
some
2 people.
configuration.
Yeah, 2 people. There's a project manager person and a CEO.
Okay.
And, the other thing, and Chris and I have talked about this, if the land bank is up and running, and what's the state allow a land bank to get the first year of what's the maximum you can get in administrative expense?
For our size land bank, 100,000.
Right. So, whether they contract with us for the 100,000, which isn't in here, or whether there's a payroll set up over there, that would open up a position. So I think, I wasn't sure when I first started, I saw bigger gaps. I do think, there's some aggressive management of getting additional county money and getting additional state grant money. But we also have, trying to think what and I'm not optimistic because we haven't heard anything about this USDA grant, but that's like a $75,000 grant for 2 years. That would, again, we're gonna have to get more into grants to be able to And that's difficult because you can't staff up. This is what happened when I was at CEG. They staffed up on grants, and then when the grants ended, they didn't have a plan. And so, I think that, we do have to look at, and if we went back, and I can do that, show what our income and expenses were for the last 5 years, it's been between $1 million and $1.2 million.
But in lieu of grants, we're very dependent on the county funds coming in.
Yeah.
To
Yeah.
continue operations. And you had said 2025 is already
We're in the state
contractually
budget,
fine.
we're in the state budget, or the county budget, both for the 460, the 90 for housing,
Yeah.
and the 150 for net of the chamber 65 for.
And that's gonna really stand out to a candidate that we're hiring. That sort of,
Well, what I'm gonna do is, I pulled the budgets from 5 other county EDCs, A, to see where, are they getting money somewhere where we're not? And B, if you're gonna come to one of these organizations, do you have that risk at each of them?
Yeah.
And, there could be ongoing board redirection of what we focus on, and as well as ongoing county refocus of what we're doing on. And, at some point, if you go back and look at the Board of Supervisors as it was constituted when I came 9 years ago, and you look at it now, totally different philosophical and programmatic
Someone who
priorities.
works at Columbia County, he's like in a deputy director position. He told me at that Molinaro event that the county supervisors were looking at restructuring, and that they may not do the level of, they're looking at going to a legislature.
Yeah, I mean, it's been looked at before. They've looked at county managers.
Yeah,
And we do very well. I mean, Saratoga Economic Development gets 500,000 from Saratoga County, and they're twice the economic engine that we are, based on population and sales tax. But it shows the real importance that in hiring someone, that they have the capacity to continue to work with the existing staff to serve the needs of the Board of Supervisors, or the county legislature, or the county executive. I think we were 800,000 when I got here. Income and expense
From the county or total?
total, and 460 from the county. So we've actually, between the loan fund interest, the SBA grants, even the membership, there was no membership component. I promised, I committed to the county when they renewed, they stopped our funding. They froze it. And my role was to come in and either rebuild their confidence and get it restored, or basically shut the place down so that they just didn't run out of the money wasn't spent just running the clock out. When we got it restored in December, they hadn't paid us for 7 months. Not only did they restore it for the following year, but they retroactively paid us for the 7 months that they didn't give us. And so, I think, it's just the realization that your 50% client is the county. I know I should have had this before the morning, but I apologize. I think that I need to go back and give you a little more detail, even in some of the sublines. I did not look into where we could save $15,000 or 15% of our office expenses. I mean, there's places to tighten up. We're going to put a new phone system in that's going to cut our phone bill in half. I mean, that means we're going to save $1,500 or $2,000, but those expenses creep in a way that, because you don't notice it went from 350 to 400 a month. So I think there's a way to get $15,000 there. I think we can tighten up, some of the other areas. But there may be areas where we want to add, support.
Expectation about approval, when, Lisa, do you know when we meet next? Quarterly?
Oh, the finance?
Yeah.
December.
The budget, when do you have to file it with the SBA or the ABO of this month? Well, we can submit this. It's a budget. We've done that before.
They don't really care, they just care that you have one, they
Yeah.
don't ever look at these, next year we'll put the actual in. So we just have to have something submitted.
So
But I would assume we would want to approve a
let's
budget.
approve the
Yes.
2025 budget.
Yeah, I mean, talking through these assumptions, I feel comfortable.
Yeah, I don't wanna submit something that's not approved.
And just-
Yeah.
Well, and I think that the 2025 budget,
I mean, let's just go big picture for a minute, right? County money is
We're not
committed
gonna
for next
2027.
year. Other revenue assumptions are relatively modest with respect to continuation of existing projects, a little bit more money coming in the door for interest income. So revenue is relatively firm. From an expense profile standpoint, you're assuming you're gonna fill one open position and you're gonna be around next year, right?
And the
you have,
giant changes don't come in until 26,
Yeah.
27.
Yeah.
Correct, that's what I'm saying.
and that's why, I had to be sure I was building 26 and 27 off a
Yeah.
solid 25.
Yeah.
And I think that you also, you're showing a small net profit, but if you were off 10% on revenue, you'd find a way to cut 100 grand. Okay, so if we could have approval of
Yeah, I feel comfortable.
I'll make a motion to approve.
I'll second if I can, Mr. Chairperson. Is that allowed? I'll second. Questions, comments? All in favor? Any opposed?
I do think it means, we have to have a board discussion on strategy as to direction. What our relationship with the county, how, what level do we want to become reliant on grants? What level do we want to engage membership? And how we would provide a membership value other than good corporate citizenship, which doesn't work anymore in these organizations.
I mean, it's kind of the four strategic tenets, right? It's county, grants, membership, right? Loan funds.
Some organizations like ours are starting to think about charging a fee for service. So if,
What service?
if a Clock Estates comes in and we're shepherding them through grant programs, if we're shepherding them,
Just administrative pastor.
Yeah.
Someplace, yeah.
but, isn't that what the county's paying us for? And I do think, there'll be more opportunities with the IDA, particularly the Hudson IDA. So, thank you.
We got work done pretty good with Clock Estates.
Yeah.
That's when I was for the time that was spent by this organization to get that job done, even though it went over COVID, but it was crazy. And then when we got them some money, a little upset that we did charge some administrative fee out of it, but it was nothing for what, 4 years, we got nothing out of that.
Well, and we
And if you listen to them, it's 10% of what they put into the property, right?
well, and they, we worked with them on several $1 million of state grants and several $1 million of IDA benefits. So, but there's a $20 million asset sitting up on that hill, and we stopped there after the Art Omai open ribbon cutting the other day. Because I told my wife, the second best view in the county is down the street. And 3:30 on a Saturday afternoon, most of the tables were full with people sampling and having light bites, as they call them. But, so. All right,
What's the audit plan? Do we meet with auditors before year end?
Yeah.
December maybe?
the auditors sent me an email yesterday, and, wanting to get together to talk about, a pre-audit, planning
Normally they
session.
come in, they talk to the finance committee, right?
Yeah,
Okay,
great.
any further questions? We have the portfolio report, Mike, on the agenda. Do you want to review that?
Martha?
At that time,
She had to, I think, she had another,
Yeah, I think we'll have that for the board meeting, and the board meeting's on, next Tuesday.
Okay.
At my request, and I'm like, I was surprised when I looked at the calendar and
you were like, oh.
any public
saw how
comments?
soon.
Nobody's out there? Okay. Ask for a motion to adjourn?
So.
Second, all in favor?
Thank you all very much.
Thank you.